Hello everyone, this is Chris Martinson of Peak Prosperity here with your update. It is Saturday, December 29th, 2018, still last days of 2018. And if you've been watching the stock markets and the financial markets, bond markets, you know that this has been a month of declines and really high volatility. This is going to continue into 2019. And that's our view because our operative phrase is until and unless. Until and unless the central banks print more money and get off of their quantitative tightening, QT, and back into quantitative easing, or QE, we're going to see more of this volatility and the everything bubble deflating. That means stocks, bonds, real estate, all of them headed down because they have a lot of false pricing that was driven up by the central banks, who had this brilliant theory. They thought, hey, if people feel like the assets they own have gone up in price, then they'll feel wealthier, and then they'll borrow more and they'll spend more. And they've been very successful at that. Listen, you know, we saw this in 2011, 2013, 2016. Here we are in 2018, it's breaking again. And by breaking, I simply mean prices of financial assets are going down. You'd think it's the end of the world, that everything, the sun wouldn't rise in the east anymore if somehow stocks fell in value or something like that. But this was all faulty reasoning, and it was all founded on a basis that is absolutely not true. And the basis is this: that the Federal Reserve and the other central banks, the European Central Bank, the Bank of England, Bank of Japan, that they can somehow create wealth by magically dumping more money into the marketplaces. They can't do that. What they can do is they can redistribute wealth. So when you read these articles like, oh my gosh, the 1%, the 0.1% got so much wealthier, as if it just sort of happened. It didn't just sort of happen. It was a matter of policy. That wealth was transferred to them specifically by activists, interventionists, misguided, ill-advised central banks who have been running these really dumb ideas since Greenspan sort of introduced this idea. By the way, V for Vendetta is about the power of an idea to do good. Well, Greenspan is the opposite of V for Vendetta. He must be B for bastard, because what he's illustrated is the power of a really bad idea to really destroy things. So good ideas, bad ideas. A really bad idea was that somehow the central banks were responsible for taming the business cycle and replacing that with something called the credit cycle. Now, they love the credit cycle over here in Bad Ideaville, because what you get to do with the credit cycle is be heroes. You know, you're throwing money, punch bowl money, you know, into the party, and everybody loves you, and you get invited to Davos and, you know, Senate and congressional hearings. They ask you really softball questions. So, Ms. Yellen, how much more awesome are things going to be this year than last year? Well, Senator, very awesome. Because you're just printing money. And everybody pretends like this is a real thing, as if it mattered, as if this was real wealth. But it wasn't. And what actually happened is wealth was transferred, because those people who are at the 0.1%, yeah, they got a lot more purchasing power. But where did that purchasing power come from? Is purchasing power something that you can just sort of manufacture out of whole cloth, thin air even? The answer is no. So the question, when you see one group of people get a ton of purchasing power, the question is, well, where did it come from, right? So here's a simple example. In Japan, they decided that one way that they were going to goose their economy for their aging, declining population, which doesn't need a goosed economy. Banking system did, different story. But the decision was made by the Bank of Japan that what they were going to do is they were going to reduce the value of their currency. And they did that hugely, like 27% over the course of a year, couple years back, and this worked great. Their stock market took off. The profits of Sony and all these other companies, just Japanese companies, really took off. And here's the reason why. If you're Sony or you're Mitsubishi or you're Nissan and you're selling a vehicle, a car, you know, a TV, a electronic product, if you're selling that in another country and it was $100 before and you sell it for $100 again, but your currency is now 27% less, you receive 27% more yen. So on yen terms, these companies got great earnings. Now, that was a lot of purchasing power when companies have great earnings. Where did that come from, though? Well, it came because the currency got reduced. Well, that means by definition that purchasing power came from somebody. Who did it come from? Oh, it came from all the people of Japan who then found that their yen bought 27% less stuff from overseas. And by the way, Japan imports a lot of food, a lot of fuel, a lot of other things. So that Sony's great earnings came at the expense of the people. That's a simple example of how a central bank, the Bank of Japan, consisting of unelected officials, as is true across the whole central banking structure in the world, decided that everybody in Japan was going to help Sony become a little bit more profitable. Now, that's an example of redistribution. That's what the central banks have been doing, and that's what quantitative easing really was. Big, long word that really meant reverse Robin Hood, taking from everybody, giving to a few. And bad idea, really dumb idea. It's been tried before all through history, and as Plutarch said, the oldest and most fatal ailment of all republics is a gap between the rich and the poor. Well, here we are doing it again. So now you have the context to understand Les Gilets Jaunes, the Yellow Vest movement in France, which, by the way, if you didn't catch it today on my Twitter feed here Saturday morning on December 29th, just saw it, the protesters lit a giant fire up against the gate of the Banque de France, right? So their central bank, like people are actually torching the main gate at the Banque de France because they understand, like maybe they started a lot of fires, it was just random. They torched the main gate to the Bank of France. No, they get it. The people of France get it, and people are waking up all over the world. The central banks are not your friend. They're redistributive organizations. They're reverse Robin Hoods. They take from the everybody, the poor, and they give to the rich. That's what they've been doing. It's reprehensible, it's crass, it's indefensible, it's awful, it's awkward. It's everything but friendly. And so this is what's actually at stake now, and this is why I think 2019, we are not going to see the central banks come back with more QE unless something really, really bad happens. Stock market crashes, closed markets, capital controls, institutional failures, sovereign failures, something bad has to happen for them to get the political cover to say, you know, the solution to this is to make the rich people richer again, right? That story's wearing thin. Viva la internet. People are starting to figure this stuff out for their own. This is what I've been writing about this week. I talk about not just that conflict, but also the conflict of the millennials being really shafted by the boomers. I'm sitting here as a boomer telling you my generation shafted the younger generation simply so we didn't have to face the consequences of our own poor decisions prior. So this is everybody in the leadership structure at the Federal Reserve, in Congress, in the US Senate, decided that instead of saying, wow, we shouldn't have run credit cycles, we shouldn't have forgotten to invest in infrastructure, maybe we shouldn't have had that housing bubble back in 2007, instead of facing up to all of that, we went for one more dip at that punch bowl, saying specifically the Federal Reserve is 100% responsible for driving housing prices back up near, or in some cases beyond, their former highs back in 2007 and 8. When you look at the house prices back then, those weren't prices we should be getting back to. Those were bubbles. And they recreated that bubble dynamic for this one really dumb reason. They said people who own homes, when they go up in price, feel richer, and therefore they'll borrow more against those homes and spend that money. Virtuous circle, except unless you understand that your house is not an asset to be tapped, it's a liability. Liabilities take money out of your pocket, assets put cash back in. Your house is a liability. Thanks to Robert Kiyosaki for that idea, which I didn't understand until he explained it to me, probably 10 times. I finally got it. Your house is a liability. That it goes up in price is meaningless to you, except that it costs you more to maintain that house in terms of taxes, insurance, things like that, right? So the central banks decided we're going to make houses go up in price. Again, they're a redistributive organization. So who paid? Who lost in that story? Because there can't be a winner without a loser. That's the nature of a redistributive organization, right? That's the fundamentals of communism. Somebody loses so somebody can win, right? This is what the central banks do. They're not paragons of capitalism, by the way. They are deeply socialist and not, if not communist sort of structures. At any rate, when house prices were rammed up in all these key markets, the homeowners there were allegedly the winners, Although, honestly, you can't win that story unless what? You sell your house, take the gains, and go off to some other lower cost environment and hold on to those gains. Otherwise, if you just shuffle around it, nothing happens, right? So all those winners with the high house prices in places like Dallas, Palo Alto, Seattle, Boston, Atlanta, you name it. Who are the losers? Oh, first-time home buyers. Who's that? That's the younger generation. So sorry, we're going to throw you under the bus along with Granny on her pension, savers, everybody else who are getting 0% interest rates on their savings. The central banks made this decision to throw an entire generation under the bus just so that this other group of people who already held the assets wouldn't have to feel the pain as much or as acutely from the past bad decisions of the central banks. Now, this tends to piss people off. So not only do we have Les Liaisons in France, but we had the Catalonia breakaway, we've got Brexit, we've got Trump. This is going to continue as long as these deeply unfair practices happen. But they're not just unfair, they're immoral. It was immoral for the central banks of these countries, and in my country, for the Federal Reserve, to decide to throw one group of people under the bus to bail out another group of people. It's an absolutely wrong thing to do. Shouldn't have happened, and this is why we shouldn't afford them the respect that they seem to want. The media, when they pump up the Fed officials say, as if they were anointed with some special power, really ought to be doing its job and asking the hard questions and saying, hey, Federal Reserve official, who I'm speaking to right now, how is it that you all came to decide to screw over this group of people and enrich this group of people? We'd love to know your thought process. Waiting for the media to finally begin doing its job. It's not doing it, and that's another story for another day. So if you want to know what's going on in 2019, come by, check out this most recent two-parter I've written. It talks about all of that, but really it gets down to the harder fundamental question of this period of time, which is who are you and what are you going to do given the nature of the world we live in? I think it's an extraordinary opportunity. I think it's an opportunity for us to wake up from a long slumber and begin to ask ourselves those vitalizing and revitalizing questions that allow us to step more fully into this life. The only one we've got. A little piece of time, right? So with that, I'm Chris Martenson. I will see you next time. And forgot. Please check out the seminar that we've got. It's coming up in April in Sebastopol, California. Hey, we go through the basics of getting ready for these times at my website and in the books and things like that, but we go deeper into these questions at the seminar. Plus, you get to meet other people like you who are thinking this way and who can see the world clearly and want to talk about it. So this is your chance to meet your tribe. So come check that out as well. Otherwise, I will see you next time. Have a happy new year.